What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're doing some stock analysis for Soundhound stock because the stock fell today over 18%, and there's some pretty big news that is coming out. Well, first of all, let's look at the past couple years. The last year, the stock is up 300%, which is insane. Dow in this February, now it's over $9. So it's been an insane run this year. But it looks like Nvidia has taken an investment stake in the company. There's lots of there's lots of big news going on with this stock. So they're saying we think every product is going to benefit from voice AI. That's their new thing that they've been investing into. And you can make all these different products, TV, speakers, toasters, voice enabled as long as it has a microphone, and you have a partner like Soundhound. Then we have its technology in cars. We have, see, it works with a bunch of different car makers here. It's in TVs like Vizio, which is being purchased by Walmart. And it works with restaurants that answer the phone. It works with insurance companies, all these different things, right? And so that's the good part. The bad part is that they're not making any money yet. But the revenue growth has been absolutely insane here. Trailing 12 months, they're up to 60. So keep in mind, the market cap on this company is now roughly 3.4. Let's see, does it say the same thing on Robinhood? Robinhood 3.4. Yeah. Okay. So $3.4 billion company, 67 million in revenue trailing 12 months. And analysts have them doing 83 million this year and then 164 million next year, which is absolutely insane. 82% revenue growth expected this year, and then it's going to jump higher to 95%. This might be the fastest growing company revenue-wise that I've seen out there. So revenue growth is absolutely insane. But look at the net income. It's been getting worse for the last 4 years now. It just keeps getting worse. They're losing more and more money. And what comes with that? Well, I'm sure the first of all, shares outstanding is going to keep going up like crazy like this, which is not helping the stock price at all. Luckily, the growth has been insane, so it's balancing this out a little bit. But still, we're looking at, you know, more than a double. Just in the last 2 years, the number of shares has doubled. That means the stock price is roughly half of what it was just 2 years ago because they issued so many shares, right? So they're making it twice as hard for the stock to go up. But I mean, a lot of companies in this position that are growing this fast and are, early on, it's not uncommon. So it's not the worst thing, but it's definitely not helping the stock. And they're issuing a lot of shares that is definitely pushing the stock price down. Okay, that's the problem. But EPS, we're looking at even more. It's going to get even worse this year. Next year, it'll get a little bit better. And then who knows? It could be 3 years, 4 or 5 years before they reach profitability, which I like investing in profitable companies. I will put small amounts of money into unprofitable companies if I really do think they have a big future, which this one honestly does not sound bad. It sounds like I mean, the market for AI is going to be huge going forward. There's not going to be any slowdown in the AI market for the next 10 plus years. And if they're already working with all these different manufacturers and these TV companies, restaurant companies, all this different stuff, then that's great, right? They could be the dominant player, one of the dominant players at least in this space, and I could see them having a successful future, but it doesn't mean that's going to happen. And so the other thing is you don't want to pay, let's say you are bullish on this, whether it's the industry, whether it's the stock, and you do want to invest in this. Well, the problem is we still don't know if that's going to happen. So that is my analysis for this. See you in the next video.